Hey folks, me again. Today I want to make a video about a short algo structure story. I am pretty sure you all have been, or a lot of you have been in this situation where you had a look at the charts and saw structure as we learned it, like the SMC approach, when you have markets moving up, having pullback, moving up, break-in structure. So what you would be waiting then for is, for the return to the order block, step 2, but price just went through it. Okay, price went through it, so you would say there is now a market structure shift, a jog. So if that happens, we would have a look at, again, a pullback or a return to the order block. So we wait here, and what's happening is, again, price went through. Okay, so price continues, we have another boss, we wait for a return to order block, but price just breaks this order block, goes through, has another jog, so we wait for market to return to order block, which doesn't happen. Price then again breaks structure, so we wait for return to order block, price goes through, and so on and so forth. And what you probably didn't realize yet, that there is a different kind of structure in place called the algo structure, which has to be viewed differently and understood differently. And once you understand it, you will not step into all the traps here, because you will see that there is actually a difference. Like, you can have a correct algo structure or a correct structure, and you can have an incorrect structure, and both look actually quite similar. But the correct algo structure identifies your trading range, meaning this is the range you are looking for trades in. And although this looks like a leg, it isn't, in fact, and it's not a trading range, and you would have a lot of traps in here, and you don't really know where you are, whilst here, this is a true leg, a true trading range. You would have a look for trades within this trading range. And once you have your trading range established, because you know true structure, then there is only 2 order blocks which you would like to trade in this. And there is more order blocks very often than those 2, but it's only 2 which we're interested in. It's our only 2 points of interest, and it's the decisional order block and the extreme order block. And other order blocks that appear are smart money traps, SMTs, and we are aware about this, and we would not trade them. We would know price most probably has a short reaction from these blocks, but they are not worth to trade. And I want to keep this video short, as I said. What do you need to understand in order to master algo structure? You have to master inside bars, pullbacks, inducements, the true break of structures, the true change of characters or market structure shift. And this will lead you, once you understand this will lead you to algo structure, to the trading range, to the decisional and extreme order blocks. And of course there's a little bit more about it, but these are the core concept, the fundamentals for structure. In order to understand decisional and extreme order blocks, there is a little bit more to understand, like imbalances, for example. But at the moment, it doesn't really help much to trade order blocks once you don't know where you are. And that's why I want to show you that there is a difference. There's a lot of traps, and how you would actually tell the story about true market structure. So let's have a look at this chart example. We can see price came down. You have your pullbacks and so on. I will not go into the details. I just try to tell you the story here. So let's say here we know we had price coming down. We can see the price shifted back up. We had a pullback down and price continued up. So what we actually would be looking for in this leg up is where are the true order blocks, where are the true pullbacks, what is the trading range in here, to make it very simple. Let's just identify this as the low. And why is this the low for us? This is the low because the first pullback was broken, the structure shifted, so we identified this as a current low in place, and then we had a true shift and a new leg up into bullish direction. So far so good. Now we would just say, okay, what is the new structure in here? We have a few pullbacks, as you can see here. We have a few inside bars, again pullbacks. So from algo point of view, the story which is told here is this is the very first pullback, and in order to have a new high in place, you know, and a intermediate high kind of, we want to see that the first pullback is broken. So we would just continue. Oh, we have a huge break here. Let's see now. Okay, we could say, wow, our high is in place. We have a low now, we have a high, we have a trading range. At the moment you don't understand what the trading range is and why there's a trading range, but you will come there. So this is now an established trading range because a high is in place, a low is in place. The high is in place because we broke the first pullback, and the pullback is exactly this one. Now, if you have a look, as we have the trading range, you would have a look what are the true order blocks. So this would be an order block. And we have an order block here. We have another order block here. So this isn't a real order block, but I highlight it and you will learn why the order block actually is this one on this time frame, and it was already mitigated. So I just highlight it like that you understand that there's a huge difference about what's a real order block and what's not a real order block and so on, and what are the points of interest we would be looking for. And we have another one here. Now, as I said before, if this is the trading range, I'm only interested in two order blocks in this whole range. One is the decisional, and the decisional is always the first order block after the first pullback, or prior, depending on how you want to see it. So this is the decisional order block, and then there is another one, which is the extreme. Both are very valid order blocks, due to the fact that everything qualifies what we want to see and what we need. Now you can see, oh, we already mitigated the decisional order block, and we have another one here. You can see here, we had an order block here, was mitigated and so on. But again, just from order block perspective, this one is a valid one. All right, so, but as it's not an order block we want to trade within the range, it identifies as a smart money trap. So we would not be interested in trading this one. This is our first POI, which was already mitigated. This is our second POI. So we would identify the trading range on the 15-minute for EUR/USD, for example, but we would trade the POIs, the point of interest, on the 1 minute. But it's not about trading today, it's about structure story. Okay, so let's have a look. Probably there was a entry confirmation on lower time frame. We don't know yet because we don't have a look at that. We just see what price does. And now you can see price violated the decisional order block. And from Algo Structure point of view, this means now price decided to go lower. I know it just wicked it. It doesn't matter. The order block was violated. Price most probably, and that's a game of probabilities, wants to go lower. And it wants to most probably come here to the extreme. There is different levels within the range which are also interesting, which could have a look for kind of advanced algo structure, but for today we keep it simple. We just have a look at the story. So we see what price does. Most probably you will see a reaction on the SMT, but we would not even switch to lower time frame because we know that this is a trap. So we'll see what price does. So we have a first reaction from the SMT. It wasn't broken, but again, we would not have a look here to trade it, if at all. And if the extreme is broken, we could have a look to trade the upper extreme order block for various reasons, which you will learn later on. But for this video, again, we're not interested in. We know this is a fake reaction because this is a fake order block. So we continue to watch what price is doing. So the next one breaks. Now we can see the extreme order block was mitigated. So before this happens, we would switch to the 1 minute to look for the entry pattern. Yeah, and let's say we would just, trade it directly. Of course, we always have to include spread and be, not too risky, because we know that the stop loss can easily be taken out. However, in this case, it was an equal low. Of course, a lot of people would qualify this as liquidity, so that's not worth the trade. However, and it is liquidity, but it doesn't mean that it's automatically be taken. So we removed the SMT because we knew this was a trap. And now, if we would take this trade, we know this is our trading range, and our minimum take profit would be this one in this case, because we would trade the whole range. In fact, that's why we identify a range. And already on a 15 minute, without switching to 1 minute, this is already a 1 to 12 R, and actually a quite nice risk to reward. And second thing is, as we now anticipate, price will most probably again go higher because of what we know. We could have a look for potential re-entries. Well, this was fast, and we would have a look for the re-entries on the 15 minute. Let's see what price does. So this, for example, would be a potential re-entry here. Potential re-entry. Let's continue a little bit faster. So re-entries would have been taken out, as you could see, and it took a little while. So re-entries, they would most probably already be broken even. However, this re-entry would hold. This would be break even or even a loss, depending on how you manage trades. However, I mean, there's nothing really complex about it. It would be still a very nice risk to reward and easy to handle. There was a quick, fast entry, moved away, and then it played around for some time. However, if you know why if you want to know why we could exactly tell the story as we did, why this was a valid order block, we could have looked for an entry here, why this was a trap and we anticipated it was a trap, why we would then look for to trade this one, and so on, and why we knew already there's only 2 real order blocks within the whole range where we would be interested in, and so on, and what would be our target. Yeah, then just have a look at the future videos I will provide and just rewatch it. This video, if there's a few things you probably have not understood. And of course, there's no details yet about why you have to understand what an inside bar is and so on. Probably one short insight I can provide you, because I also want to provide you with indicators in future, like this Algomate, where you then can see why I chose this line in order to anticipate a reversal, because we had a dot here which validates the pullback, why this would be the order block, why we have where we have the inside bars here, this is the order block and not this inside bar, and so on. So the Algomate, of course, can help you. Here you can see why I chose this line to confirm the high, because there is no other dot in those bullish candles. This dot needs to be broken, and so on. So the Algomate for the backtesting sessions can make things easier for you, at least in the beginning. And this is something I will or want to provide you, of course, with, to make your life easier. All right, that's it for today. Hope it was of value for you, and we will see us. Until then, have a good one.